Have you ever wondered if those seemingly money market funds really live up to the hype? Today, I'll be sharing with you my personal, honest reviews of money market funds in Kenya. I'll be telling you what worked, what didn't, and whether they are truly the low-risk investments that they claim to be. Stay tuned. Hi everyone, I'm Wangoi Mwithathi and welcome back to my channel. Here we talk about personal investment strategies, real financial experiences, and smart investing. If you're looking to understand how different investments work, especially in today's market, you, my friend, are in the right place. In this video, I'll be giving you an honest review of my experience with money market funds here in Kenya. I'll be discussing their low risk, their low return nature, why their yields have dropped. As you all know, it went from the highs of 18% to the lows of even less than 10%. And the challenges that you face, especially if you're relying on them while aiming for rapid wealth creation. I'll also be sharing things like dangers of panic selling and give you some tips on diversifying your portfolio. Before we dive in, please like, subscribe, and turn on notifications so that you don't miss out on any future insights. So let's start with a quick review of what money market funds are and my initial attraction. Money market funds are a low-risk type of investment designed to preserve capital and provide, though modest, steady returns. When I heard about money market funds in Kenya yielding interest rates of roughly 18%, I was really intrigued by the idea, especially of earning higher returns than a typical savings account, unlike those typical kawaida accounts we have out there in banks. But most of all, I was intrigued by their low volatility and liquidity. Some of the things money market funds offer are stability and capital preservation, easy access to your funds, and consistent, if modest, returns. At the time I invested in a money market fund, the promise of 18% returns seemed like a perfect low-risk way to grow my savings. However, as I continued my investment journey, I learned that market conditions changed, and when they changed, so did the yields, dropping to around 10%. Now, let me tell you what my experience in investing in a money market fund has taught me, most especially about the pros and cons of a money market fund. Remember, this is based on my experience, okay? I'm not speaking for somebody else. So, I'll start with the pros of a money market fund. One, the low risk that comes with it. Money market funds are designed to protect your principal amount, making them a safe choice for conservative investors. Okay, so I felt that is one of the things that would favor me. Two, high liquidity. I get to access my money without significant penalties. And this is because I've been in investments where once you've invested your money, the minute you want to pull out, you want to withdraw your money, there's a price you have to pay for that. So that's another added advantage that I liked about investing in a money market fund. And three, the stability that comes with investing in a money market fund. Money market funds provide consistent returns and act as a secure parking place for your funds, especially in uncertain markets. From my experience, these advantages made money market funds a great choice when it came to preserving my capital, especially during turbulent times. So those are some of the few things that made me or triggered me to start investing in a money market fund. Now, let's talk about the cons, the disadvantages of investing in a money market fund. And this is because every investment has risks, okay? And some of these disadvantages, I've experienced them, and that's why I am giving you my honest review. So one of the disadvantages is they have low returns. You see, while they are considered safe, the returns are modest. As we speak, around 9%, 10% interest, which is not enough if you're aiming to rapidly build wealth. Okay? 2, opportunity cost. By solely relying on a money market fund, you, the investor, or I, might miss out on higher returns from riskier investments, or if I chose to go down a riskier investment with high returns, such as stocks or venture capital, or even something like real estate. Okay? The third disadvantage is the inflation risk. Lower yields may not be able to keep up with inflation, which in the end erodes purchasing power over time. Okay? So that's not such a great thing. But anyway, I just feel like you need to do your due diligence before investing, okay, in anything at all. I realized as much as money market funds provide or give me peace of mind, they were not the magical bullet for wealth creation. So if I am looking to get rich quickly, or if I want to make more money quickly, I may need to take on higher risk or continue diversifying my investments, because money market fund alone cannot do it. So, and speaking of diversifying, let's talk about the importance of avoiding panic withdrawals or panic selling, and how doing something like shifting funds can optimize one's portfolio. One major pitfall I encountered was the temptation to panic sell, especially when the rates were really going down. When the yields dropped, I'll be honest with you, I was tempted to pull out my money, like withdraw. I realized it's easy to get caught up in short-term market fluctuations, but I also understood selling in a hurry locks in my losses and disrupts my long-term strategy. Okay? And this is something from the beginning I didn't want to do, anything that would interfere with my long-term plans, especially when it comes to investments. So I try and avoid panic selling. I stick to my plan and stay calm. And at every step of the way, I try to understand that market cycles are normal. I'm always constantly reminding myself that slow and steady wins the race. I have to constantly remind myself that wealth building is a marathon, okay? It's not a sprint. It's not something you can do in just like a few minutes, a few hours, a few days. It will take time. When I invested in a money market fund, it taught me to even become more patient. I also try as much as possible to diversify, because diversification is key. I don't rely solely on money market funds. I try my best to diversify into other investment vehicles that tend to offer higher returns, for example, stocks, real estate, or even balanced funds. And this is because I came to realize that shifting between funds, especially when they are based on performance, can help lock in better yields over time. You see, the more I try and keep my portfolio balanced, the more balanced my portfolio is, the more I can enjoy the safety of money market funds while also capturing growth from higher yield opportunities. In summary, my experience with money market funds in Kenya has been an eye-opener for me. Okay. As much as they offer low risk, they also offer stability and high liquidity. But all you need to know is that money market funds returns or their lower returns simply mean they won't be able to make you rich or wealthy quickly or fast. So, the earlier you understand that a money market fund cannot make you rich as fast as you think it can, the better for you, okay? You'll stop having too much expectations. You'll stop being angry. So I try as much as possible to avoid panic withdrawals or panic selling, and I do my best to diversify my investments so that I can capture growth from riskier assets while still preserving my capital. In the beginning, I never knew about money market funds. I heard it from someone and I thought it wise. I thought to myself, why don't I try this out and see what happens? So far, my experience has been great. And I say this because if ever I wanted to withdraw my money, it was easily available to me within between 24 to 48 hours. Whatever time I can withdraw or deposit money, okay? There's not much low-risk investments out there. There are not very many. But one that I would suggest for anyone, especially if you're thinking of trying it out, I would suggest you try out our money market fund, okay? All you need to do is just read terms and conditions, find the advantages and disadvantages of each. And I'm sure you'll find a money market fund that will align with your goals, okay? As I continued, I also realized that money market funds are all different. They are all different in their own ways. So find one that works for you, the same way I found mine. The experience is good, and as much as the markets are going down, I decided not to fall in the trap of panic selling. And this is because I believe every investment has risk and patience pays, okay? And there's this saying, they say when something is down, the only other way that it can go is up. So it might not be sooner, but maybe later. You never know, okay? So far, that's my experience with low-risk investments. But I'd love to know about your experience, okay, with a money market fund or with any other low-risk investment that you know out there. Let me know in the comment section, okay? Well, that's it for us today. I hope this gets to help someone. If you'd like to see more videos like this, don't forget to like and subscribe, and you'll be notified once we upload another new video. Thank you so much for watching, and see you next time.